Hey guys, welcome back. Patrick here. I just wanted to give you a quick update on RocketLab and what's going on with the stock. Why is it falling after hours? And what are my plans for this company? You guys know that I had a position before, and I do plan on making this my long-term play on space. So what am I going to be doing now that the share price is actually falling? All right, so let's get into it. I'm going to try to tell you what's going on so you're not too shocked tomorrow if you see the stock down 10-20%. So after hours it's down to 14.15, down 8.47%. There's already people that are preemptively selling their shares because they know that there's going to be a lot of selling pressure in the next few days. And why is that? That is because the way that SPACs work, when the company merges, they have to register the shares, right? And this is the S1 for most companies. I'm not going to go into like the foreign companies, that gets a little bit more complicated, but for most companies, they're going to be filing the S1, which is the prospectus, and the prospectus basically shows you what the company structure is, all the shares, who owns it, and all of that, right? So you guys probably have seen them by now. They also filed an amendment. Sometimes there's little changes, and then it takes a while for the SEC to actually accept the prospectus. So they're going to do that usually between about 1 week and 1 month. It really depends on like if there are adjustments to be made and also how backed up the SEC are. But typically lately it's been like on the shorter side, and usually you are going to see the 424B3 filing, which is when this prospectus comes into effect. So this is what has been filed tonight, and now we can expect that tomorrow the shares are going to be registered for this new company after the merger. Now, why does this matter? Well, if you notice, you guys know that we've been talking about the redemption squeeze lately, which, to make it really, really easy, is that in the lead up to the merger, people will redeem some of their shares to get a fraction of what the SPAC has in trust. That takes away shares from trading, right, from circulation, and that makes it so there's a small pool of shares left. That makes it so the share price tends to go up. In the case of RocketLab, it went up to $20, which is pretty silly for this company. It's not worth $20 at this point, right? So the share price has slowly come down, but since there's not a lot of shares in circulation, it makes it so companies can't actually short the stock. So you can do it yourself, not necessarily with this one now because they're going to be registered, but you can go to one of the stock that has very, very low float. You can just try to sell 100 shares short, and in a lot of cases, you are going to get a message from your brokerage saying that either it's a restricted stock, they don't have a lot of shares, and you're going to be paying very high fees, or you're going to say, they're going to say outright that there is no shares to be actually sold short. So when that happens, it makes it so there's not that downward pressure from all the big hedge funds and institutions shorting the stock. And that's why companies like these have hovered between $15 and $20, even though at this point it is probably overvalued. All right, so when they file the S1 and then comes to effect, you can actually look at the filing and look at how in this stock there's 46.7 million shares from the PIPE. So there are a lot of other shares from the founders and from other parties in this transaction and all of that, but a lot of those have lockups and they're not going to be selling. But a lot of the PIPE, you know, they don't really care about this company. They're not long-term investors in the stock. A lot of them are arbitrageurs. You know, they just want to get a quick profit and get out of it. And in some cases, you can actually go down. In this case, it's on page 109, and you are going to see a list of the different parties that own shares in this company. All right, so this, I'm not an expert on this, I'll be totally honest with you guys, but you know, we have people on the Discord that look at this a lot closer than me, and there are also some people on Twitter that really follow this and that have a background in hedge funds. And according to them, out of all these people that can actually start shorting the stock tomorrow and get out of their position, there would be about 21 million shares that might be sold in the next few days, right? That are very willing to sell. So when you look at them, as I mentioned, I don't know all of them, but usually companies like BlackRock tend to be more long-term investors. So you can expect that their 6 million shares, they're not going to be dumping them in the market in the next few days. But there are other people in this, investors, that they're going to want to get their money out as soon as possible. So again, right now we're looking at about 21 million shares coming into the market in the next few days, sold short, and then also just people exiting their position. That should be putting a lot of pressure in the market. Now, I do want to mention that there can be like a little rebound often in the morning. What I call now, I coined it, I put a term to it, I'm calling it the bag holder rally or the bag holder rebound. So not everyone understands the mechanics of the SPACs. I mean, it is very complicated with all of these filings and everything. So a lot of people, especially the newer investors, are going to be seeing this as a dip, and it's a company that we like, so we want to buy the dip. So you are going to see like people like this, oh, thanks again for the dip, and they're going to be buying into this weakness. And so what happens is in the beginning they're going to be buying as people are selling, and it could make the share price go up until at some point there is just going to be too much selling going on, and the buyers are going to roll over and the price is going to start crashing. I mean, we've seen this time and time again, right? So you guys might have experienced it before. I just wanted to let you know what was happening with the stock. If we look at the chart real quick, it had been going down over the past couple of days, right? From $20, it went down to 15, and then after, oh, that's the minute chart. Sorry about that. So if we look at this, it had been at $20, now it's settled at the 15, and it had a little rally yesterday when the company had good news about the NASA contract, which is not really a big deal. So I'm going to show you what my positions have been in the stock, and you can decide if it makes sense or not. So I originally had bought 400 shares of the company for 4,500. I wanted to build it over time. My goal was to get to 2,000 shares, but at the time, this is back in April, I wasn't as familiar with this process that we're seeing right now and why the SPACs tend to crash after the merger. So I ended up selling it recently, last month for 6,157. And the way it works is that I had sold puts on it and they were exercised, so I got out of the stock with a profit. The amount that I sold for was something around $15.50 or 74 cents. Right, so I made $2,000 with this stock so far, and now my position is earlier this week I bought November 19th $12 puts. I bought 10 contracts, and as you can see right now they are down, right? Because yesterday the stock was going down, so these were actually profitable, but today with the little rally I was down for the day with these puts. Now it looks like tomorrow they might be green if the stock price actually goes down, and then that's unfortunate because, as I mentioned before, this is a stock that I like long term. But we have to deal with the fact that SPACs, they have this merger process, and right now I'm not really interested anymore in opening any long positions on SPACs until at least when the warrants get exercised. So we're not anywhere close to that with this stock, right? So there's going to be some negative catalysts. Plus, because of the New Zealand lockdown, they've already told us ahead of time that the third quarter earnings are going to be dismal, right? They're going to have almost no revenues, something like $4 million. So the fact that the company is worth $6 billion currently, well, it's pretty obvious that it's overvalued, right? So doesn't mean that I don't believe in it long term, just means that short term, with all the negative catalysts linked to SPACs, it's not really a good time to be in the stock. So that's why I got out of it, and I do think it's going to drop. Now, how far is it going to drop? That, of course, is a mystery, right? I went with, not this one, I went with the $12 puts because I felt like it gave me a pretty good chance of being profitable, right? But I don't exactly know how low it's going to go. Personally, if I had to guess, because it's a stock that people fundamentally see value in long term, I do think that it's not going to drop to $5 or $7 like we've seen with other stocks. Of course, I could be wrong, but my personal guess is we might see it stop at like $10, but I do expect that we are going to see a lot of selling pressure, and we could see $10, $9. It is entirely possible. And then once enough people have exited their position and they establish an actual base of long-term shareholders, you know, not like these, some of them are like more short-term momentum players. Once we establish a long-term shareholder base, then the stock's going to stabilize and start to rebound. So I hope you guys learned a little bit and you're not going to be too shocked tomorrow. Please like and subscribe, and I'll see you guys in the next video. Thank you.